I'm talking to Chamath Palihapitiya, the larger-than-life founder of social capital. Chamath made his mark as a disruptive force in Silicon Valley. Now he's upending Wall Street as the king of SPACs and superhero to the Robinhood crowd on Reddit. His immodest goal? To build a Berkshire Hathaway for the social media generation.
I do want to have a Berkshire-like instrument that is all things, not to sound egotistical, but all things Chamath.
Chamath has set his sights on everything from cryptocurrencies to ETFs. We had a lot of ground to cover. Day traders, hedge funds, and the GameStop moment. How Chamath made his first $10 billion. The next frontiers for social capital. His political ambitions in California and beyond. Here's my conversation with Chamath Palihapitiya. To those who don't understand your anti-establishment appeal, what do you stand for?
I think it's sort of defined in the mission of social capital, which is that I believe in an even starting line. I think that's probably the simplest encapsulation of my belief in how the world should work, which is that, we should all effectively get access to the same resources, and that as many of us as possible should be allowed to get to the starting line, and then the gun should fire, and then the outcomes will be what the outcomes will be. And I think a lot of us feel that that isn't necessarily always the case, that there's kind of entrenched hierarchies that prevent progress. So I push against those because they touch a very deep emotional part of my value system. And I just don't think that the world is a better place for them. And I think we're better off without them.
Chamath, you have acquired a powerful and influential voice, increasingly so on Wall Street. Why were you so excited by the GameStop short squeeze and then so outraged when Robinhood had to throttle buy orders?
Look, on the way in, I think what GameStop showed was the narrative fallacy on Wall Street. I think for years, there was these folks that sort of, were these wizards behind the veil. And they had a way of conducting themselves that purported to be just intellectually superior to everybody else. But in reality, what that short showed was that they were prone to the same, poor decision-making and broken systems and technologies that everybody else has to deal with. And so I found that kind of funny. I think it also spoke to the fact that we really haven't looked closely enough at the systems that were broken as a result of 1998 and LTCM, long-term capital management, then 2006, 7, and 8 with Bear and Lehman. And we're allowing the same problem, slightly different, but roughly the same problem, to repeat itself over and over again. And so that's what sort of angered me about GameStop. And then on the back end of it, I just felt like these two worlds collided in a way where I doubt that in the end, in the final analysis, there was any collusion of any kind. But just the stench of this whole thing just goes to show you, back to where we were talking about before, about how difficult it is for normal, everyday folks to have access to any kind of return. So if we break down the capitalist philosophy, they are just fundamentally stuck in this cul-de-sac of always being labor and always being sort of at the, ownership of capital, of the ownership class. And the fact that normal folks can't get access to returns and, close the inequality gap is just going to make all of the things we're dealing with today a lot worse than they already are.
From what I can tell, you appear to have reconsidered a couple of the things that you said in the heat of the GameStop moment. Where do you stand on hedge funds as a group of actors and the role they play in modern finance? And also the other thing that came up in the context of this situation, short selling.
I think hedge funds are a really important part of the financial infrastructure, and I think that they should exist, and I hope that, the ones that are good can thrive. But I also believe that disclosure needs to get improved. I think in every other part of society, as the internet has become more sophisticated, as software has become more sophisticated, things have erred towards real-time disclosure of everything in every market. It's just not true in finance, where people are able to sort of use the rules and bend them to obfuscate the truth. So, for example, there was a rule that the SEC was considering where you wouldn't have to publish your longs anymore on the same frequency. To me, that's nuts. I think that actually, we live in a world where your longs and your shorts should be published in real time. Because again, what separates you should be your analysis and your interpretation of the facts, not obfuscation. Another thing is that I think that you should be, forced to disclose the margin that you're running and how much leverage you have. And, I think that hedge funds and banks are no different. They're a critical part of the financial infrastructure. They should be treated in the same way. And instead, I think after 2007 and 8, a lot of the risk effectively, quote unquote, went off balance sheet and away from the banks and towards these other really important actors, but who just don't have that much oversight. I still think hedge funds will do really well. I still think that there are some folks who are incredibly talented who will make just a ton of money for themselves and for their investors. But I think disclosure needs to go up. In terms of short selling, I buy the fact that it's an important part of the market. I'm not a huge fan of it. I do think that certain folks really use it to run a neutral strategy. And, I think that that's great. But I also think that, now in the world of social media, and we've seen this recently, disinformation can be used to not just cause political damage, but I think disinformation can also cause economic damage. And so I think that the SEC is going to have to deal with that issue and figure that out. How do we manage information or interpretation or sensationalizing of things that all of a sudden can whipsaw the markets up and down? And these actors, how are they regulated? Are they allowed to just say whatever they want and the implications are what they are? Or is there a higher standard now that there's so much distribution for so many more people?
That is a calm, sober, and thoughtful analysis. It wasn't a few weeks ago. What changed?
Well, look, as with everything, I really do take pride in the fact that I have strong opinions, but they're weakly held. I think it's important to have a point of view. And, I come to very quick conclusions. But also sometimes I'm emotional and those conclusions are more judgments. And then I take a step back, and I'm fortunate enough to have a lot of people around me that question what I said and push back, and then I re-underwrite. And it's not dissimilar to an investment. I try to come to a very quick point of view, but then I get data and I constantly re-underwrite. And, then the heat of the moment passes, deal heat or, emotional judgment. And then what's left is a sober assessment of the truth and facts. And, that's sort of where I am now on this. And frankly, most of the things that I do.
One of the things the GameStop episode, let's call it, shone a light on is Robinhood. And not just Robinhood as a company, but zero commission trades and the ability for retail, let's call them retail investors, to participate in a momentum chase. Do you think on balance that apps like Robinhood and the way that they've gamified, and you've heard that term many times, trading, not investing, but trading, is a healthy thing on balance?
I think that it should be allowed to exist. You use the word healthy. Do I think it's healthy? Not particularly, because I think it keeps people in this ghetto of being labor. I started as a day trader effectively, meaning on the side, I would speculate in my teens and in my 20s. An investor is not a speculator, and it's not a day trader. And I think that a lot of retail, a lot of normal people, the only way they will close the inequality gap is because they take it upon themselves to learn how to become an investor. The government's not going to save them. No law is going to save them. No, taxation of the rich is going to save them. They can save themselves. And you have to learn how to invest, which is to put money into the things you care about and then do nothing. And learning that second part is super hard. And so if you have apps that glorify speculation, you're not going to teach the right kind of behavior. So of course they should exist. I believe in a free market. Am I a fan of them? Not particularly.
I want to understand, Chamath, how you decide what to invest in. Do you believe, and this is a subject that's come up on your podcast, your All In podcast, do you believe in fundamentals, or as has been argued, a stock can trade wherever, regardless of whether it is or isn't hinged, to the fundamentals of the underlying business?
Well, maybe I can just give you an insight into how I process any opportunity.
Sure.
Random company comes in to the top of the funnel. Immediately, I'm making a very quick, hopefully it's a decision, but maybe sometimes it's a judgment. And I'm asking myself, does this fit into my worldview or not? Meaning, is it in my circle of competence? And I have a very simple way of looking at this. Is it going to fix something in inequality that I think is important, or is it going to fix something in climate change that I think is important? Those are the only two things I care about. Inequality and climate change. Under inequality, there's a bunch of stuff. Financial equality is important. Healthcare equality is important. Education equality is important. So it allows me to organize a lot of different opportunities. And I'm trying to figure out, is there a consumer proposition here that's important for them? Does it make something more symmetric? Does it take something that was asymmetric and fix it? So that's my first judgment, which is qualitative. That's why whenever I start my one-pagers, it's always, what is the strategy? And you can read all of these one-pagers now. And what you'll get away from them is the first lens is equality and or climate change. Then I start to do the fundamental work. And this is where I have a real issue with a lot of people who say that they're value investors. I think that I'm a value investor. The thing is that when you look up the word value in the dictionary, it doesn't mean cheap. It doesn't mean a cigar butt with 2 puffs left, that famous Buffett Munger quote. I think it actually means something that has value. And so then I'm really thinking about, what are the cash flows of this business? How does it create a moat, right? Meaning in software, some technological way that's hard for people to compete with it. And then can I get it for a price where there's a margin of safety, where if they misexecute for a quarter or if they have a little hiccup, it's going to be okay. Because we've got an entry point where 5 or 10 years from now, this thing will be 5 to 10 times bigger. And that's how we think about all these things. And if you look at the deals that I've done, they kind of map pretty singularly one-to-one to that framework.
So let's use a real-world example. Obviously, this is not the kind of deal you're doing, but if you looked at Tesla today through that lens, is that stock a buy with a market cap north of $800 billion?
The short answer is yes. The reason is that I think look, I bought Tesla in 2014 or 15. I was one of the largest owners of the convertible debt. I felt that was the best margin of safety way to bet on Tesla. It's turned out to be an enormous winner. And I really believe in what Elon is doing. I think he's the most important entrepreneur of our lifetime right now. It's taken people 15 years to embrace that they're going to be now a legitimate car company. But when I underwrote the investment, my bet was on something bigger. And I think that Elon is well past building a car company. And I think it'll take another 5 or 10 years for people to figure out what this next arc of innovation is. And what that is the deregulation of energy. If you look under the hood, utilities spend tens of billions of dollars, hundreds of billions of dollars a year all around the world on CapEx. They are completely regulated. They feel completely safe. They feel like they can issue debt ad nauseum. They can cause all kinds of damage to the environment or otherwise, look at PG&E and still come away unscathed because they're protected. Except that something is happening that nobody forecasted, which is the complete bottoms-up disruption of energy. And that's the only way that this thing is going to get deregulated. It's not going to be by law or dictate. It's not going to be, a big monolithic competitor. It's going to be because every home installs hydro panels, solar panels, batteries, and then software that basically allows them to live off the grid. And then eventually pump their excess energy into battery solutions and other things that are controlled by cities and towns and governments, who then in turn will turn off their usage of peakers at a minimum. And then over time, will have very different characteristics of usage from traditional utilities. That is what Tesla is powering. That is what allows it to be a multi-trillion-dollar company. So does it have the same return profile as when I bought it at what is it equivalently now 25 or 30 bucks a share? Well, obviously not. But can it be multiples higher than where it is today? Absolutely.
Chamath, you've built an extraordinary franchise in special purpose acquisition companies. 6 SPACs, billions of dollars raised so far. Tell me, from your perspective, is there a limit? Is there a limit to what you can do with SPACs? Is there a limit to the size of the SPAC revolution in terms of available capital or quality of targets?
I think what's happening in SPACs is really about the dismantling of the traditional capital markets with respect to fundraising. So the equity capital markets, really had one go-to move, which was the IPO. And then obviously there was follow-on financings and all of that other stuff, but the traditional S1 driven IPO process. And what you picked was a brand that you trusted to be your on-ramp into the public markets. You pick Goldman, you pick Morgan Stanley, you pick JP Morgan, Credit Suisse, Barclays, et cetera. I think in 2021 and going forward, you're still picking brands, but that choice has become more atomized. And instead, you'll pick the IPO 2.0 platform that myself and Ian Osborne created. You'll pick, the reInvent platform that Reid Hoffman and Mark Pincus has stood up. You'll pick, the SPAC platform that Alec Gores has created. And there's many different versions of this. But that is the exact same decision that used to happen 25 years ago when you used to pick a banker. Except now you're picking an individual level partner. And so I think that SPACs are very much here to stay. Back in the, using the language of inequality, it evens the playing field. It democratizes access to high growth companies. How? Because it allows retail and it allows long tail institutional investors, folks that may not have necessarily been tier 1 hedge funds. Now they can also play. They may get allocation in the original SPAC IPO. They can go buy in the market as soon as it goes public. They can participate in the pipe. They can buy after a deal is announced. So many opportunities versus one allocation in a book building process that a traditional S1 process was all about.
What's the biggest SPAC you can see yourself raising?
Having a bigger size doesn't necessarily help. In fact, what's more useful is to actually have a reasonable size, because you can upsize a deal with a pipe and instead focus on sectors and themes. And the reason is because, again, going back to brands, entrepreneurs want to partner with people that deeply understand your business. And so it's much more likely that if you had 2 or 3 SPACs, all of the same size, except with sector focuses, you could find different independent directors that were subject matter experts. That'll make the companies better. It'll make the diligence process more useful. The decisions are higher quality. And so I think that's where the world should go. But I'll tell you, putting a $400 million SPAC to work is meaningfully easier than a $1 billion SPAC. And I've done both, but the former is much more flexible than the latter.
You describe finance often as a game rigged in favor of insiders at the expense of outsiders, especially the retail investor, the little guy, if you will. But I would make the following observations, and others have as well, about SPACs. The sponsor gets a 20% promote. Wall Street banks get paid underwriting fees twice. Hedge funds get big share allocations and then cash in the warrants to make a risk-free return. And finally, giant investors like Fidelity, BlackRock, Neuberger Berman, and well-connected billionaires like yourself get to participate in pipe transactions at $10 a share, right? The same price as the retail investor, but with total information. How is that not a giveaway to insiders at the expense of outsiders?
Yeah, I think this is a really good point you're making. So let me break down a few of these points. Look, the first is that if you can generate superior returns, you should be allowed to compensate and participate yourself in that. When I used to manage institutional money, again, all of this capital is my own, but when I used to manage institutional capital in early stage investing, I charged a 30% carry. No hurdle, no nothing. And people were willing to bet that I could generate returns, and I have, 30+% returns over the last decade, that justified a 30% carry. Similarly here, on the deals that I do, I take a 20% carry. And I think that I can find targets and find opportunities that will make that more than reasonable in the final analysis. And I think that if you look at the returns we've generated for shareholders, it's been nothing short of incredible, inclusive of the carry that I've taken. That being said, I've always thought it was important as well to do two things. Number one, Eric, is to put a lot of my own money on the line so that there was never a question of why I was in this. And I was in this to make sure that I could find great companies that I thought, again, fixed inequality or climate change. But then second, to accelerate those things with our capital and to make sure that I could explain it to people, including normal folks and retail investors. And I do that by saying, listen, just so you know where I'm coming from, I'm going to put in more money than any of you. And you should take that as a serious signal that I think that this is important, and I take it very seriously. The second is that it allows me ball control. And then having ball control allows us to basically slowly even the playing field. Now, what do I mean by that? And this is to the second point that you brought up. I think that there is a lot of work that we can do to make sure that retail, A, has more allocation of the IPOs. Right now, we have a pretty decent allocation, but it's small. And the reason is that the technology that we use to allocate shares in IPOs is brittle. And I've been working with a partner. I don't have much to say beyond it's an intention right now, but I'm working with a partner and with Credit Suisse, our banker, to expose more of our initial IPO allocations to retail. The second is that we are going to start a process to try to educate the regulators so that they can expand how they think about what an accredited investor should be. The reason why we cannot give access to the pipes and some of these other mechanisms to retail is because of very strict regulatory definitions that we live by about who is a quib, who is an accredited investor, and those things are changing, but they're changing slowly. My perspective is that right now, the way we define it is too broken. So I think that there's work that I can do, and hopefully people will listen to those arguments and expand the rules, and that way more people will be allowed to buy pipes and these other things. But I want to be really clear. That is where we would like to move the ball so that everybody can be in an open, even playing field, bid for the IPOs, bid for the pipes, participate with complete transparent information.
Chamath, you're an experienced investor, you're an experienced manager, and you can argue persuasively for the 20% promote or carry, if you prefer, that you earn in a SPAC transaction. There are people raising SPACs who have no experience as investors, no experience running companies. Is that movie going to end well?
The good news is humans are adaptive, and I think the answer is yes, we will be okay. Will there be a bunch of bumps along the way? I think so too. And so, yeah, we have a real responsibility to educate and teach people. But again, we need brands to do that because, nobody's going to listen to Buffett. Buffett doesn't have the energy to say what he said 30 and 40 years ago in 2021. And that's okay. He's earned the right to basically chill out and be the GOAT. But there has to be other folks that take that mantle and, take the baton and do it as well to this younger generation in language they understand. And look, to your point, that's why people say, like, who is this guy? Well, who I am is a byproduct of my generation and my media culture, which is faceted, not always great facets, but multifaceted. And so you have to speak in the language of the times in order to get your point across.
So think big for a minute. If you really want to disrupt a game rigged in favor of insiders at the expense of the outsiders, how else would you like to transform finance?
I do want to have a Berkshire-like instrument that is all things, I mean, not to sound egotistical, but all things Chamath, all things social capital. Look, I mean, I was the one that backed up the truck in 2012 on Bitcoin, 2014 and 15 in Amazon, 2015 in Tesla. These SPACs are doing well. I can be a little judgmental at times, but I'm a good decision maker. And I think I know where the world's roughly going. And I want to translate that. I've made enough money for myself. It doesn't really float my boat. I do it as a demarcation of success and to keep the pressure on. But the best pressure for me was if I, was an instrument that retail, normal, ordinary folks could use to close the inequality gap for themselves.
One of the things Buffett did was effectively hold forever, right? Put his permanent capital to work and almost never sold. Is that you as well? Is the money that you have in, whether it's Virgin Galactic or Clover Health or Open Door or SoFi, permanent capital that you're never taking out?
Yes, but with an asterisk. Buffett became a billionaire at 58. I, because of Facebook, quite honestly, got extremely lucky in my early 30s. But this last decade has been training. And, these last few years now, I'm really on the field. I got my pads on, and I feel like I can play as good as anybody else. But the reality is all of the things I want to do vastly outweighs the capital that I have. Probably I'm, running $10+ billion, 10, 15 billion. I don't know the exact number, to be completely honest, I should. But I am risk on, and I am moving a lot of balls down the field, myself and my team. And the reality is that those things sometimes consume capital. So at the end of last year, my family office called and said, hey, dummy, you need to put a little bit of money here just to make sure that we have liquidity and we can keep doing all these things. And so I had to sell, a couple million shares of Virgin. I didn't want to. I haven't sold a single share of anything that I've done in the SPAC platform, in the pipes, other than those few million shares of Virgin. So if given my druthers, Eric, and if I could really just go for it, I wouldn't sell a share of anything I buy because I believe in it. But every now and then I run up into liquidity constraints like everybody else, and I get a call and they say, Chamath, stop, slow down. And I say, no. And then they say, okay, then at least give us a little buffer here so that we can continue to do all the things you want.
Is the $10 to $15 billion you're marshaling, is that money inside social capital, or is that in total? Does that include what you're doing in your family office and personal holdings that you may have in, say, Bitcoin or Tesla or Amazon or Facebook or whatever?
I know it's like the totality of everything, but it's like sloshing around in a bunch of LLC. This is the thing, social capital is more of a name, meaning, is it an entity? Yeah, technically there's a company with the name social capital on it, but everything is flowed through a Byzantine bunch of LLCs and this and that I personally own. This is why, part of the work now that I have to do this year is reorganize myself. So, Social Capital 1.0 was a traditional set of venture funds called Social Capital. Social Capital 2.0 is basically my family office. And for Social Capital 3.0 to become a reality, which I would like to do in the next couple of years, I have to do some cleanup work. And again, this is sort of like, when the music's on, you have to be dancing. And so I haven't had time to do that because, I see opportunities and I want to seize them and I want to invest, thinking that I'll just come back and clean up whatever organizational mess is created afterwards at some point.
And this Social Capital 3.0 would be a public company?
That's my ambition. I think that I want to be held accountable to folks. I want to, I have learned that, I make better decisions when I am authentic and transparent. And so the best way to do that is just to be living my life out for everybody to see, my professional business life. And so I like the idea of the transparency of the public markets. I love the idea of having investor calls, having an analyst day, teaching people, learning from people, having a yearly thing that Buffett does. I would want to do our own. It won't be as grandiose or as big, but maybe it will in 30 or 40 years. And so, I want to do those things. And look, I'm going to work until I'm 65. And so between now and 65, that's the goal. And, to be honest with you, I don't have a very high regard for money. And I don't know Mr. Buffett to really tell you what he thinks about it, but I grew up with nothing. I'm going to die with nothing. And this is purely an instrument that I can use to put the foot on the gas. So I'll give you an example. Mm-hmm. Today, for all the ballyhoo talk about climate change, China controls 80% of lithium-ion battery production. And so to the extent that we ever get into a geopolitical posture where China decides to slow down the progress of the United States, one of the ways in which it can do it is just to basically slow the trickle of the critical inputs and precursors that we need to make batteries. No batteries, guess what, Eric? No climate change. And so, that's an area that I'm going to invest in, and that's an area I'm going to go for it. Is it risky? Yeah. Will it cost several $billion? Probably more. Could it fail? I think if we think through it from first principles, I think it has a very high degree chance of being successful. But I'm going to make a huge bet. And so I'm willing to take the product risk. So in that way, I think I could be different.
Give me a sense, Chamath, of what the reorganization involves. What's going to go into this holding company? What businesses or activities are you operating currently out of Social Capital 2.0 that will end up in 3.0?
So obviously we have our SPAC business, and that's an incredibly great machine. Between Credit Suisse, Skadden Arps, Connaught, Social Capital, Head of Sophia. Mm-hmm. It's like, this is like the all-star team. I mean, it's like, 1992 Barcelona Olympics, Team USA. It feels, these guys are just such pros. And so it's an honor to work with them. So that whole platform. I do have an aspiration to cut and paste and do an equivalent platform solely focused on biotech, because I think that that's a very different risk profile, smaller deal sizes, but you can expect me to explore that. I think that ETFs have something that have always intrigued me. Then we have a bunch of businesses where we own and operate. We started an insurance company, next generation AI, machine learning insurance business that's writing some very complicated reinsurance products around, cat risk and pandemic risk and cyber risk. I'm really excited by that. We have two healthcare companies. We have an enterprise software business that is doing something very unique. And so, there'll be a bunch of those assets.
You've said, Chamath, you were a billionaire by the time you were in your early 30s. Do you have any idea what you're worth today?
Yeah, I don't. I mean, I probably should, but I don't. I have a rough sense, highs, I think it's, I think I just told you it's kind of probably in the 10 to 20-ish.
North of 10. Okay.
Yeah.
I want to quote one of your all-time most popular tweets. When Bitcoin gets to 150,000, I'll buy the Hamptons and convert it to a sleepaway camp for kids, working farms, and low-cost housing. What inspired you to write that one?
Well, I can't take all the credit. Friends of mine and I, we have a little group chat, and we were just, talking about random things for the summer, in the hope that the pandemic eases. And one of my friends, Rob Goldberg, actually was the one that said Champtons. And it just kind of like set off a light bulb. And then I just wrote it and I kind of published it. It's very tongue in cheek. I did another one which said, like, I think when Bitcoin gets to 40,000 or 100,000, I'm going to buy Goldman Sachs and rename it Chamath Sachs. These are all jokes. This is the part of my personality that some folks don't get, which is this is just tongue in cheek. It's just, honestly, I never thought I'd be here. I'm enjoying the ride. Every minute of this feels like a complete dream to me.
I admire you for not taking yourself too seriously. The Bitcoin thing, however, is very serious. North of $40,000. So it's not 150. You can't buy the Hamptons yet. It's not 100. You can't buy Goldman Sachs yet. But
can I tell you something about Bitcoin, which is so important? So I think Bitcoin is very important because it just shows the fragility of the traditional financial infrastructure. And if you just look at the quantity and the size of like the M2 money supply as an example, the real question that I think people should be asking ourselves is, okay, if Bitcoin becomes a de facto reserve currency that basically displaces gold, what replaces the US dollar? And here's where, if you want to just bear with me for a second, it's not Bitcoin that replaces the US dollar. It is a stable coin. And what does all of that mean? In less fancy language, there are companies around the world that are replacing one fixed US dollar with one digital token of a US dollar. And by simply making that small abstraction, they're able to completely build financial rails that didn't exist before. On-ramps and off-ramps to trading, to asset management, to banking, to payments processing. There's a revolution happening. It's not felt as much in the United States because people don't see it because the financial services infrastructure is so robust. But when you look in the developing world, and if you look in any market where there is any form of currency manipulation or currency instability, that's the future. And so, Bitcoin is a canary in a coal mine for a completely virtual, largely anonymous, and we can debate whether that's good or not, financial reality. And so, I think that it's a very important trend that's worth understanding. The other thing is, so many of the dislocations that we've seen won't happen anymore when we go on those rails. So, going back to this whole GameStop debacle, as I've learned more, and as you probably know now too, a lot of this has to do with the arcane way in which stocks are settled. And what I learned was we used to have a T+3, after the trading day, 3 days later is when you'd settle. And it was moving heaven and earth, crying and screaming to move companies to go to T+2. Well, if you're running a stable coin or, smart contracts on top of Ethereum, all of this next generation infrastructure, this is T+0, right? You're settling things in a nanosecond. And that's really good for everybody.
In addition to Bitcoin, which coins, if you will, cryptocurrencies, digital assets, are you a holder of? Are you a believer in?
Well, I will be publishing this soon. I am building a fairly sizable portfolio of what are called NFTs, non-fungible tokens, some digital art, some virtual trading cards. And these may sound crazy to some, but I do think that that's the next frontier of digital currency and digital assets. And so I have been building a portfolio. My decision is the team and I will announce it. We will publicize everything we own, and we will make our holdings transparent so that folks can track along and see as we buy and sell things. So that's coming in a few months. I'm not really ready to show the details of exactly what we hold yet, but I'm really excited. Maybe in a few weeks, actually, but I'm very excited. We're almost ready to tell the world.
Do you still want to break up big tech?
Well, I think they need to get regulated. I think that companies like Facebook and Google will be subject to much stricter laws. Section 230 will change and recognize them as quasi-publishers. And I say quasi because this is where, again, laws and politicians' understanding of the economy is still too brittle. But if they can bring the right people to teach them what an algorithm is and what machine learning and what weights are and how these things operate, what they'll see is a mechanized publisher. And there should be rules for mechanized publishers that are different from being a dumb pipe. So I think that that's going to happen. And then, for Microsoft, Apple, and Amazon, I don't think that much is going to happen. And the reason is because I think that those guys are generally on the right side of history. And they generally don't err towards the type of hot button issues that politicians care about. Like Facebook and Google threaten the institutionalized structures of power and influence that codify politics. Amazon Prime doesn't do that. Getting toothpaste, the next day, it's just not that disruptive. So, the laws will affect the folks that, threaten to disrupt politicians first and foremost.
And you think politicians can meet that threat with regulation, as opposed to, in Facebook's case, forcing the company to divest of, say, Instagram or WhatsApp?
Well, can they? I'm not sure that they can. Will they? Yes. And I think that, look, when you look at Mark's stated strategy, Zuck's stated strategy, if I had to, again, do a one-pager for that laboriously long thing that he wrote, it's basically what he said was, I am going to take all these products, I'm going to entangle them together so that institutionally this code base is monolithic. Now, this is an engineer speaking to you, such that if any sort of, carve-outs or divestitures were to come to pass, it would take years for us to disentangle this mess, which are many more years where I can bet on the laws changing, the government changing, or their minds changing. So I think from a business strategy perspective, it was both obvious and brilliant, but I don't think it was seen for what it was by politicians.
Chamath, you've been an outspoken critic of Gavin Newsom and even stoked speculation that you might run for governor of California. What are your political ambitions? Do you have any?
I would like to promote centrism, and I would like to coalesce people around centrist, normal, moderate goals of progress, and then to have candidates who can carry the water on that platform. That's my real political ambition. I don't have any particular ambition to run, particularly because the implications of doing that job day to day, for me, I think are a little under-leveraged in the sense that, the conflict of interest and the divestiture rules would force me to cripple a bunch of things that are really important to me. I mean, going back to batteries, I couldn't do anything. If I thought that it was really important for me to secure lithium supply for United States battery manufacturers, I mean, today I can just write that check, right? I can mobilize the capital and I can go and get that and secure the United States supply of lithium. I couldn't do that if I was governor. And so I wouldn't be able to act in ways that are important for us. So, but I do think that I can see if, floating a trial balloon allows us to coalesce around moderate ideals. Because I think when politicians are at their best, it's when they get out of the way. They kind of do, not much harm, and they kind of move laws along in a progressive mandate that allows the rest of us freedom to operate. And so, that's kind of my belief. I think extremism is kind of very short-lived and is just a manifestation of the fact that these systems are broken and need fixing. But the way to fix them is with technology. And the only way to harness the resources of technological people is via for-profit mechanisms. And so governments need to set up the incentives and mostly just kind of step aside and get out of the way.
Whether we like it or not, politics is a money game. Have you given thought to how much money you want to put behind these candidates whom you'd like to see in office espousing the ideals you share?
On the assumption that, Citizens United doesn't get overturned, my plan will build. It's not that today it's in the millions a year, but my plan will build to hundreds of millions a year. I mean, look, think of what has happened in American politics because of the Kochs or the Mercers. What is the moderate version of that? Where are the group of people that over 20 or 30 years can systematically build an infrastructure that promotes just centrist decency? It doesn't exist right now. And so, yeah, I would like to build that, and I'm happy to, pay my share of that.
At the moment, I think you're spending some money to recall the governor, Gavin Newsom, I saw a figure of $100,000. How much are you willing to put toward that issue?
Yeah, probably a few million. I mean, like.
That's not insubstantial.
No, it's not. I think it's about sending a message. Look, we are in a very terrible place in California. So on the one hand, this is, having lived in Sri Lanka and then Ottawa and then Toronto and New York and DC and now here in California. I mean, I'm biased, but this literally is the single best place on earth. I mean, the weather, the food, the people, the temperament, it's just the ingenuity. It's incredible. And there should be, growth for years and years here. But the schools are completely broken. The air is the worst. The crime is some of the highest. The taxes are some of the highest. So we're like completely upside down, and we're in like, bonkers land here. Look, I think it's 40,000 taxpayers in California represent, more than 50% of the entire tax base. 40,000 out of 60 million. And those folks are the most mobile. And now they've already started to move. Toyota is gone, Oracle has left, Tesla has left. None of this had to happen. And so, California has swung too far to the left. There's no centrism. There's no moderate, reasonable approach to live and let live anymore. It's a bunch of sanctimonious judging. And I just think that has to stop.
Are you going to stay? Or are you going to follow some of those other billionaires to Aspen or to Austin?
I don't cut and run. I mean, I owe this place everything, I owe America everything. I'm not trying to scalp an extra 13% on my taxes. I could care less.
I heard you in a conversation with Kara Swisher a few years ago describe your mood at the time. I am not your slave. It would appear that you've reached a different mindset.
I was living somebody else's life. And that life would have been amazing for some other person. But it didn't map to my values of how I should live my life and what things matter to me and how, transparent and authentic I wanted to be. And that was an emotional outburst that really encapsulated the anger I felt and how trapped I felt. And mostly the anger was at me. I could have said it better than I am not your slave. Right? But I did it. I'm okay with it. I said it. It's true. That's how I felt at the time. But yeah, I feel like I'm working for me now, and that feels great.
Well, I wish you luck with those.